Welcome to the Deep Dive. Today, we're tackling a company that, well, it generates a lot of buzz, a lot of debate. Palantir Technologies, PLTR.
That's right. And you sent us a great starting point, this article, Palantir, PLTR, exposed. Is this controversial AI stock a buy, sell, or hold?
So our mission here is pretty straightforward. We're going to unpack that source material for you.
Yeah, get into the nuts and bolts. What is Palantir really doing? How do they make money? Who are they up against?
And critically, what's the financial story? We want you to walk away with a much clearer handle on what is, let's face it, a pretty complex company.
Definitely. Because Palantir, it isn't often talked about like just another software firm. It's positioned as something bigger, almost strategic.
Right, like they're trying to redefine how whole industries, even governments, operate using AI on these really tough data challenges.
Exactly. So we'll look at their core tech, Foundry and AIP.
Yeah.
We'll explore their competitive advantages, their moat, so to speak.
We'll check out their recent financial performance, which has been pretty interesting.
And then weigh up the risks versus the opportunities if you're thinking about it from an investment angle. Basically, is this a solid long-term AI play?
Okay, let's dive right in then. The tech. You can't understand Palantir without getting a grip on Foundry and AIP.
That's the foundation. These platforms are all about turning, well, just vast amounts of messy data into actual intelligence you can use.
Starting with Foundry. The article calls it an ontology-powered operating system. That word ontology, break that down for us.
Okay, so think of it like this. It's not just about having data. An ontology is about understanding the meaning and relationships within that data. It's like building a detailed map or like a specialized dictionary for your organization's world.
So it knows how things connect, like this part connects to that machine, which is operated by this person and affects this production target.
Precisely. It builds a kind of living knowledge graph of the whole operation. It doesn't just see data points, it sees the system.
And that's what gives Foundry its power.
That's the core idea, yeah. Because it understands the context, it can integrate data from totally different sources, break down those silos everyone talks about.
Right.
And once you have that integrated, understood picture, then you can do the fancy stuff.
Yeah.
Advanced analytics, automating really complex workflows that cross different departments.
Even building internal tools or marketplaces around that shared understanding of the data.
Exactly. And the source makes a key point. This ontology structure is fundamental for making their AI agents actually work effectively.
Which brings us to AIP, the artificial intelligence platform. That came out in early 2023.
Yep, and it's not really a standalone thing. The article calls it a plugin based on Foundry. Its big job is to make all this power accessible.
Accessible to people who aren't, data scientists or hardcore coders.
That's the goal. It drastically lowers the barrier to entry. You can leverage Palantir's tools and even external models like GPT-4 without needing a PhD in computer science.
How does it do that? Through these AI agents?
Sort of, yeah. Because AIP uses that underlying Foundry ontology, the map of the business. It can help create these really targeted AI agents. The source had some great example.
Like Trinity Rail.
Right. They use agents to streamline managing all their suppliers and parts, automating emails, summarizing delivery times, even flagging suppliers who weren't performing well. Real operational stuff.
Okay, taking insights and actually doing something with them. What about Heineken? That sounds like a massive operation.
Huge. And they use agents with these fun names like accelerate orders before out of stock or Dr. Dre to optimize their supply chain.
Dr. Dre's.
Seriously, apparently. These agents help prioritize orders if stock is low, manage shipping container costs, reroute things if needed. It takes a lot of the constant human juggling out of it.
And Plexel with clinical trials.
Yeah, the agents automate tasks like annotating data, generating documentation, mapping, and validating data sets, stuff that's super tedious and expensive for people to do manually in trials.
So it's the agents, but also visualization and this low-code aspect. What does that feel like for a user?
It means you don't need a giant tech team sitting behind you. People in operations or management can interact with the system using visual tools, drag-and-drop interfaces, or even just typing questions in plain English.
Like talking to ChatGPT, but it actually knows your company's specific data inside out.
Exactly. That's the democratization piece. It brings sophisticated analysis and AI control to non-technical folks.
So Foundry builds the deep understanding. AIP makes it usable, and together they let Palantir create these highly customized data applications.
And that customization is key. The source argues, look, Every company's data is unique, its challenges are unique, so data applications cannot be made generic.
Which justifies their approach of deep integration.
Right. They're not just selling software off the shelves, they're building these comprehensive enterprise data ecosystems, sometimes even full enterprise operating systems tailored to the client. The European Cricket Network example shows how far that can go.
That deep integration, that tailoring, it sounds like it creates serious stickiness, as the source puts it. Makes it hard to leave.
Very hard. Which leads nicely into how they actually make money from all this.
Yeah.
The source describes a dual-engine approach.
Okay, two main ways. What's engine number one?
That's their historical base, government and defense. Think long-term contracts with the U.S. government, allied nations. Stable, often classified work.
Using the Gotham platform mostly, right? For
Yes.
national security, counterterrorism, military operations.
Exactly. Analyzing massive data sets for the Department of Defense, optimizing logistics, even helping with things like the NHS response during COVID. It's critical high-stakes stuff. Provides a solid revenue foundation.
Okay, engine one, government. What's engine two?
The commercial sector. And this is where the source highlights massive recent growth. They're pushing Foundry hard into large companies' manufacturing, energy, finance, healthcare.
Using it for similar things. Optimizing operations, predictive analytics.
Pretty much. Helping companies use their data to run better, faster, smarter, gain an edge. And that U.S. commercial revenue growth has been, well, explosive lately.
That's a key growth story for them then. And how do they land these big clients? There's a specific model mentioned.
Yeah, the acquire, expand, and scale model.
Yeah.
They might start relatively small, maybe even a low-cost pilot project to prove the value, get their foot in the door.
Show what the tech can do on one problem.
Right. Then, once they've shown results, they expand the deployment to tackle bigger, broader challenges within the company.
And the end goal is to become deeply integrated, almost essential to the client's operations.
That seems to be the strategy, become the operating system for their data.
Okay, so unique tech, two market engines, a plan to scale within clients. But this is a tough space. AI, big data, lots of competition. What stops the big guys? Google, Microsoft, IBM from just eating their lunch. What's Palantir's competitive moat?
A crucial question. And the source lays out several layers to their defense, these formidable barriers to entry. It comes back to that core tech. Proprietary data integration and AI models built on the ontology. Creating that living knowledge graph tailored to each client's unique mess of data is incredibly hard.
It's not a generic solution you can just plug in.
Not at all. That deep customization is a huge barrier. Rivals can't easily replicate that bespoke understanding for every single customer. It takes time and deep expertise.
Okay, what else?
Second, especially for the government side, their regulatory expertise and compliance. They've spent decades building trust, getting clearances, understanding the specific needs and security protocols of defense and intelligence agencies.
That's not something a startup can just acquire overnight.
Absolutely not. It's a massive hurdle. Their Gotham platform is built precisely for these environments. Third, there's their unique delivery method, the software plus services hybrid model.
Those forward-deployed engineers we mentioned.
Exactly. They embed their own engineers within the client's organization. It's not just, here's the software, good luck. They provide the expertise to make it work, integrate it deeply, drive value.
Which is especially valuable if the client, say a government agency, doesn't have a huge internal tech team.
Right. And this deep involvement, mapping all the client's data to their ontology, that creates that extreme stickiness the source talks about. They become intertwined.
Hard to rip out once they're in. Any other parts to the moat?
Yeah, a couple more. They're dual government and commercial business. Being strong in both sectors is unusual. They leverage security lessons from government for commercial clients and maybe some commercial agility back into government work. It diversifies their risk and reach.
Makes sense.
Then there's the results-oriented company culture. They have a reputation, maybe controversial sometimes, but for being very aggressive, very focused on delivering results fast for the client. In complex projects, that speed could be a big advantage.
Get things done quickly.
And finally, a more subtle one, potentially lowered R&D costs through AI. The idea is they can use their own AI tools internally to make their own development and operations more efficient. Expand without hiring quite as many people proportionally.
Okay, that's a multi-layered defense. So how do they compare directly to, say, Google Cloud or Microsoft Azure? They offer AI tools too.
They do, but the source suggests it's a different model. The tech giants provide powerful infrastructure and toolkits, right? Cloud platforms, general AI models. But typically, the client needs significant technical expertise in-house to stitch it all together, integrate it with their specific data, and build the actual applications.
So Google gives you the bricks and mortar, but you need your own architect and builders.
That's a good way to put it. Palantir aims to be both the architect and the builder, delivering that more complete, tailored, end-to-end system that becomes the data operating system, especially for those really complex, high-stakes situations.
What about IBM? They've been in enterprise AI for ages with Watson.
True, but again, the source frames Palantir as more focused on that deep ontology integration and the agile embedded deployment model. IBM's offerings might be seen as broader, perhaps more generalized, compared to Palantir's very specific deep dive approach for complex data environments.
And someone like Lockheed Martin, are they a competitor?
No, the source positions them as a customer or user of AI, not a direct software platform competitor. They might use AI tools internally, maybe partner with Google Cloud or others, but they're not building and selling an enterprise AI platform like Palantir is.
So the key differentiator isn't just having AI, it's the ability to deeply integrate and operationalize it within the client's specific, messy reality using that ontology foundation.
That seems to be the core argument. It's about making AI work in the real world, especially where the data is complex and the stakes are high.
All right, let's get to the financials, because this is where things get really interesting and frankly contentious. What's the performance story?
Well, the recent story, according to the source, is one of strong and actually accelerating growth. Quarterly revenues have been climbing, especially from 2023 into 2025.
The Q1 2025 numbers highlighted in the source were pretty impressive.
Yeah, really strong. Total revenue up 39% year over year, hitting $884 million.
And the U.S. market was particularly hot.
Very. U.S. revenue jumped 55% year over year. And breaking that down,
That U.S. commercial segment we talked about.
that was the star. Grew an amazing 71% year over year to $255 million. Huge validation of their push into the private sector.
Government side still strong too.
Yep. U.S. government revenue grew 45% year over year. So both engines firing, but commercial growth is notably faster right now.
And they're closing bigger deals.
Seems so. 139 deals over $1 million in the quarter, and 31 of those were over $10 million. Shows they're landing significant enterprise and government contracts.
Profitability is key too. How are they doing there?
That's another big positive highlighted. They achieved GAAP net income. That's the standard accounting profit of $214 million. That's a 24% margin. Their adjusted operating margin was even higher, 44%.
Yeah, generating cash.
Good cash flow, too. $310 million from operations, $370 million in adjusted free cash flow. So, financially, the recent picture looks healthy and improving fast.
What's driving this acceleration? The source connects it to AI developments.
Directly. It credits the maturation of large language models, which makes AI more powerful, and crucially, the successful rollout of their AIP platform in early 23. That combination seems to have unlocked new growth.
The source mentions a V-shaped rebound.
Yeah, in metrics like operating margin and revenue growth, it flagged a Rule of 40 score of 83% in Q1 25. That metric combines revenue growth and profit margin. Anything over 40% is considered good for a SaaS company. 83% is, frankly, stellar.
And big institutions are invested too.
Okay.
Strong growth, profitability, big deals. So where's the catch? Because we know there's a huge debate around this stock.
And the catch, the elephant in the room, is the valuation. As of May 2025, the market cap was hovering around $298 billion.
Almost $300 billion. Wow.
Right. So while growth and profits get top marks, maybe an A rating like Seeking Alpha gave them, the valuation metrics often get an F. We're talking price to sales ratios that have been way up there, 70, even over 100 sometimes. Forward price to earnings over 200.
Let's just translate that. Paying over 70 times annual sales or over 200 times expected annual profit. That's astronomical by historical standards.
It is. It means the market is pricing in an absolutely massive amount of future growth. That $298 billion valuation isn't based on today's numbers. It's based on the expectation that Palantir will grow incredibly fast for a very long time to come.
So a huge chunk of the potential future success is already reflected in today's stock price.
That's the crux of the debate. To justify this price, you have to believe they can capture a really significant piece of the global AI software market.
Which is projected to be enormous.
Truly massive. Roots analysis projecting $5.2 trillion annually by 2035. Generative AI growing super fast, nearly 31% CAGR. Palantir is seen as a top vendor in AI platforms, and winning those bigger deals shows they're capturing share.
So the investment case isn't really if they can grow, but if they can grow fast enough and for long enough to eventually justify today's price tag.
You've nailed it. The underlying trends, data complexity, digital transformation, AI adoption, are all strong tailwinds. Their unique ability to deploy tailored solutions is attractive. And that 70% plus U.S. commercial growth is a powerful signal they can execute. But does it justify that multiple? That's the million, or rather billion-dollar question.
With sky-high expectations comes significant risks if things don't go perfectly. What are the main dangers the source points out?
Several key ones. First, given their government work, regulatory and data privacy concerns. Working with intelligence agencies always carries reputational risk and the potential for stricter regulations around data use and ethics. Public perception matters.
And the big tech players won't stand still.
Definitely not. Competition from tech giants is always there. While Palantir has its unique angle, Google, Microsoft, Amazon are constantly improving their AI offerings. They could become more direct competitors, especially maybe in the less complex commercial space.
Can Palantir themselves keep scaling effectively?
That's another risk.
Mm.
Scalability and profitability challenges. Maintaining super high growth gets harder as you get bigger. And their high-touch, high-cost model might limit how quickly they can penetrate, say, the small and medium business market without changing their approach. It's tailored for big, complex clients right now.
And we circle back to the valuation again.
Always. High valuation is probably the most cited risk. The source is clear. If they miss earnings expectations or lower their guidance even slightly, the stock could get hit hard because so much perfection is priced in. Investors are paying a huge premium for future growth. Any hint of a slowdown could be severely punished.
Any other risks? Customer concentration.
Yeah, customer concentration. Historical, they're diversifying, especially into commercial, but their historical reliance on a few very large government contracts still carries risk. Think budget cuts, contract renewals, geopolitical shifts affecting defense spending.
So, given all this, the potential, the crazy valuation, the risks, what's the general vibe from analysts in the market?
Extremely polarized. You see strong bulls who believe in the tech and the long-term vision, and strong bears who just can't get past the valuation. Analyst ratings are all over the map. Buy, sell, hold. It's a high beta stock, very sensitive to news and market sentiment, which means volatility.
Any chance they get acquired?
The source mentions it, but thinks it's pretty speculative, maybe unlikely right now. Their unique position, those sensitive government contracts, the strong vision of the leadership, maybe partnerships are more likely than a full buyout.
Okay, let's try and pull this all together. We've gone deep into the source material. What's the final picture of Palantir?
The picture is of a company really pushing the envelope and applying AI to solve complex real-world data problems for very important clients in government and big business.
Key strengths are that unique ontology-based Foundry platform, the AIP layer making it more accessible.
And those significant competitive moats, the deep data integration, the regulatory know-how, the hybrid software plus services model, the dual sector presence, and that results-driven culture.
And the recent numbers look good, accelerating growth, especially U.S. commercial, gap profitability, bigger deals.
Definitely positive trends. But hanging over all of it is that extremely rich valuation, which demands near flawless execution for years to come. And the risks, regulatory, competitive, scalability, the valuation itself are very real.
So who might actually consider investing in something like this, according to the source? It sounds intense.
It does. The source suggests it's potentially for long-term growth investors with a high tolerance for risk, a long time horizon, and a strong belief in AI's future and Palantir's unique role in it.
People willing to ride out the bumps.
Exactly. Also, conviction-based investors, those who've done really deep homework, understand the tech and the model inside out and have strong faith in the company's execution.
And maybe people specifically looking for AI exposure.
Right. Investors seeking AI exposure who want a company that's not just building AI tools, but is deeply embedded in applying AI to critical, complex workflows in the real world.
The source sums it up pretty starkly. Not for the faint of heart. That valuation demands continued stellar growth.
It really does. But look, the narrative is powerful. You have innovative tech, proof they can deliver value, and a truly enormous potential market. If you believe data mastery is the future, Palantir presents a unique, if very expensive way to invest in that theme.
The source even suggests maybe dollar cost averaging, if you do believe, to kind of smooth out the entry point given the valuation risk.
Yeah, That could mitigate some timing risk. But ultimately, it boils down to your own risk tolerance, how long you plan to invest, and how much conviction you have in their story.
So we've dug deep into Palantir using your source material, explored the tech, the business model, the competitive defenses, the financials, and those significant risks and opportunities. We've seen how they aim to turn messy data into real intelligence, especially in tough environments.
And highlighted how central that customized, ontology-driven software plus services approach is to their whole identity.
Which leads to a final thought, stemming directly from the source material for you to consider. Palantir makes the case that because every organization's data is unique, data applications cannot be made generic. This justifies their deep customization, their embedded engineers, their contrast with generic cloud tools where the client does the heavy lifting. So the question is, does this intensely customized software plus services model, the one that creates that extreme stickiness, actually represent the unavoidable fundamental complexity of making AI work effectively at scale in the messy real world?
Or does that very complexity and customization ultimately limit their potential market? Does it create a ceiling on who can realistically adopt their solutions compared to potentially simpler, more generalized platforms from competitors, even if those platforms require more client effort? Is their necessary depth also a potential constraint?
Something to chew on. Is that deep integration the only way for complex AI, or does it limit the reach?
A fascinating question about the future of enterprise AI. Keep exploring.